So I'm here with Andy Matin, who's the Managing Director at Harrison's Property London, based in Canary Wharf. I know many of you will be familiar with him. I'm the Head of Marketing at Harrison's. My name's Laurie. And we thought that it would be useful to just sort of bat a few questions back and forth with each other today, just in terms of the initial impact that we've seen coronavirus have on London's property market. And sort of discuss some questions that some of our clients have already posed to us, what we're doing to continue to maximise their income throughout all this, while also minimising the risk. So Andy's here to sort of answer perhaps the more operational questions, as well as the direction that the market is likely to take over the next few weeks and months. And to illustrate the kind of things that landlords should be looking out for during that time. So what is the immediate impact that you've seen coronavirus have on London's property market?
Afternoon, Laurie. Hope you're well. Well, before I ask you a question, obviously I just want to take the opportunity just to sort of say to everybody that might be watching this, and on a broader scale, that of course I hope everybody's too affected directly. I think what's become very clear, over the last couple of weeks is just how important our health is to all of us, and so certainly try and ease some concerns and allay some potential fears that people may be having at the moment with regards to their business and their property portfolios. But yeah, we wanted to just make a point of saying I hope everybody's well. And we'll be more than happy to sort of take any questions directly, following this Q&A to my mobile if anybody wants to speak about sort of more specific matters. So yeah, in terms of how is it having an impact on the property market today? Well, of course, with the restriction of movement that we're experiencing at the moment, we're unable to actually physically go out and conduct appointments. So in terms of that sort of front end kind of experience for potential customers, we can't actually go and visit properties for viewings or valuations, and mortgage surveys can't go ahead. So what it's kind of brought the sales market in terms of new sales is kind of brought that to sort of an abrupt hold, which is completely understandable in my opinion, given what's going on. So any new sales, in my opinion, I think that comes to a halt. In terms of sales that are already currently agreed, everything in terms of our experience and our pipeline is very much still committed. Haven't had any buyers or sellers at this stage show any sort of bigger concerns. So everything's still moving ahead in terms of the sales that are under offer. And communication, of course, in a time like this is key between all parties, the solicitors, the vendors, and of course the agent. So that would be my my overall opinion on that. In terms of lettings, it's a slightly different format. With lettings, I guess in a time like this, people hang on to sort of security. People need somewhere to live. And I guess the big trend that we've seen in lettings so far is that a lot more people are looking to renew their tenancies. Some on more flexible terms as opposed to fixed term contracts. People are entering into sort of periodic contracts and on a rolling basis and things like that, which we're seeing a lot more of. Similarly, the restrictions apply, not being able to do viewings and valuations and things on the front end, but where there is a big opportunity for agents that were already really well placed digitally, that have had professional photography, 3D tours, which is something we've been doing for sort of nearly a couple of years now. So they've been having a really big impact in terms of we're still procuring tenancies. People do still need ultimately somewhere to live. There are people that are, despite the restriction of movement, that their contractual commitments are changing. Unfortunately, people's employment statuses are changing. So there is actually quite a lot of movement under the surface in terms of listings that are coming to us and that will be coming to the market. Many of which we already have digital assets on, so we'll be able to secure tenancies and tenants for those customers quite easily. The more challenging scenarios are going to be where there is no marketing material anywhere for apartments, because again, we can't physically go in, we can't send photographers in. So if you've got something that's due to come onto the market without digital assets, there's a slightly more challenging sort of set of criteria. But there are ways around these things, and as I said, particularly with lettings, tenancies are still being procured. People are still moving, and people are, ultimately you do still need somewhere to live. So I'd say it's slightly more positive for lettings, as I said, just through the necessity of lettings. Things are certainly happening. The sales deals that have been agreed to date are still proceeding as planned. But as I said, in terms of new sales, I feel that is going to sort of come to a halt. Unlike lettings, people aren't necessarily prepared to part with, £500,000, for instance, looking at a virtual tour. I feel that that's something which is understandable. So any plans to look to sell, in my opinion, would be best to really hold and maybe review, see how the market pans out. But certainly an opportunity in terms of lettings would be no problem procuring a tenant at the moment.
Mm. And you mentioned specifically for the sales market, it being more difficult to get into the properties and actually have a good look around yourself before parting with that sort of amount of money. Is that one really the only reason that people shouldn't be buying a property at the moment? It is now a good time? Could you potentially get a deal on a property if someone was desperate to sell?
I personally don't feel the values have been affected just yet. I mean, if this thing goes on for weeks, which I think we all hope it will, I don't really see there be too much of an impact on values. If we start talking about months and months, then maybe that'll be a better time to ask the question. But certainly at the moment, look, there's, as I said, the sales pipeline. Not just me, but with colleagues of mine from other industry, other agencies. My counterparts have all echoed a similar feeling that the current agreements in place are being honoured. There's not too much of a knee-jerk reaction to this thing. It's just, as I said, securing a buyer is a little bit more tricky because we can't get in there. And understandably, if you are buying and looking to buy, I think anyone listening to this that's been through the buying process will understand that until you actually go into a place and actually physically see it and feel it, you're not gonna make a decision. Sure. So that fundamentally, yes, in answer to your question, the only reason why you shouldn't be buying at the moment is because you can't physically get in to see. I don't feel like there's any adjustment on values or any anything of that such which has had an effect on the market. Certainly not yet, anyway.
But getting that sort of physical presence in there is a pretty big roadblock at the moment to actually making any sales transactions. So turning to the lettings market then, as a result of this restriction of movement, if a landlord has a property coming up in the next couple of months, should they be worried? Is it worth listing at all yet, or is that market sort of on hold for now?
The market's certainly not on hold because the necessity of lettings is that people do still need fundamentally somewhere to live, and as mentioned, their employment statuses are changing, people's contractual commitments are changing, people's lifestyle commitments are changing. People are probably I've seen some examples just this week where people are now sort of looking to maybe go back home, maybe where they had sort of plans in the short term. So there's movement fundamentally in the lettings market. I've actually had one of my busiest weeks for listing inquiries this last week because there is that movement. So should you be concerned? Look, as we stand here today, we can't do viewings, we can't market effectively. So the next week or two might be a little bit prohibitive. However, should you be concerned on a larger scale? Absolutely not. As I said, there's no real impact in value that's having an impact in the market at the moment. People still need somewhere to live. We are still procuring tenancies at the moment, and a lot of the success has come from how well, just as on a personal perspective, us as an agency at Harrison's, how well we've been geared up digitally for a long time now, with online viewings, 3D viewings, video viewings. These are all things that we've just been doing for just good marketing practice for a considerable amount of time. So no, I wouldn't be too concerned. I think if you're using the right agent and you can be creative with the digital assets that you have, then absolutely not. It's not a time for panic, that's for sure.
It's funny to think how perhaps even 5 years ago it might have been a different story for our industry. Things like the virtual tour technology and people having videos sent to them on WhatsApp and that sort of thing are a thing really of the modern era that wouldn't have existed had this happened only a few years ago. So it really is digital technology being adapted and implemented at its finest that's kind of propelling our industry at this time, isn't it?
Yeah, you completely spot on, Laurie. You know, like this is something that we've always tried to be cutting edge as possible with regards to the techniques that we use, and you know, not just in our industry, but you know, overall, you can see this sort of difference even just being on this call with you now. You know, and being able to communicate with the customers in this sort of way is it's revolutionary, really, and it is really the technology now that we're all leaning on. In order to, you know, to still live our lives and do our and conduct our business. So and yeah, it's an irony in that, I suppose. But it's working, and as I said, luckily we were really well placed before the lockdown particularly happened, where we're still able to conduct our business pretty much unaffected, really, which is why I suppose, as I said, the general messaging from us is there's no real time to panic. We can use and leverage the technology that we have around us, and if it's implemented correctly, which we do, then you know, business can still be done. You know, tenants can still procure apartments, and landlords can still receive their rent. So largely, you know, lettings, as I said, I feel will remain unaffected.
Now, in the wider economy, I mean, I'll be specific to the UK here. I'm not as aware of what's going on around the world, but certainly there have been some amazing announcements, things that were unprecedented in our lifetimes from the government over the last week or two, just to safeguard jobs and employment, and the sort of measures that have come out to support people's incomes through this time, if perhaps they can't work or if they own a business which is struggling, and the loans that are available to them and so on. That must be a good sign for the property industry, right? You know, people can at least still afford their rents for the time being.
Yeah, completely. I think that the government support that's been put forward and proposed has been outstanding, to be honest with you. I'm struggling to come across anybody that disagrees. You know, I'm actually, on a personal note, not someone that would benefit hugely from it personally, but I'm still completely advocating how well they've handled the situation, in my opinion. And from a broader economy position, absolutely. You know, there were people that were maybe really fearful for their income and the support that them and their businesses would receive just a few weeks ago. And the messaging now seems to be completely different. You know, of course, there are some intricacies to all of the schemes and proposals that have been levied, but in terms of overall market confidence, it's you know, the way, in my opinion, that the government have handled the whole process has been exemplary. And again, I'm struggling to come across people that disagree, you know, with that sort of thesis. So, yeah, I mean, it's made a huge impact to I guess I said, the market confidence. People still feel like they have income. People still feel like they can make decisions. People still feel like they can commit to tenancies and you know, continuing to purchase properties that have already been agreed. And as I said, I think the only restriction really at the moment for us is the freedom to do viewings and to introduce people to new apartments. But like I said before, you know, there are still ways around that.
Obviously, these measures have been introduced by the government quite quickly. You know, it's all been done in a bit of a rush, which has been necessary, of course, and the restrictions on people's movement and that sort of thing were also pretty quickly implemented. People didn't have much time to react. And so there are going to be some holes in some of the things the government has planned for, and there may be some people who are still perhaps unable to pay their rent or struggling with their bills at the moment. What would you say to landlords who might be nervous about their investment incomes as a result of coming under hardship during this time?
Well, I think you've got to use the support that's been levied. You know, unprecedented is a word that's been thrown around a lot at the moment, and rightly so. And we do live in a time where, you know, the support actually that's been provided is unprecedented in itself. So I would certainly be keeping communication with your tenants and your managing agent if applicable. So, you know, we're in contact with all of our landlords at the moment to, you know, so mitigated and minimised, and communication and dialogue with the tenant proactively as opposed to reactively is key. if you wait until your tenant hasn't paid rent, then that's a day too late. The dialogue needs to start now. It needs to be open, needs to be honest, and it needs to be in a way where you can support and almost sort of identify problems before they occur. So that's really, really important as a landlord, that you do that to ensure that you're on top of any potential issues proactively. The next thing I would be looking at doing, that's the basics to sort of secure the income. In terms of the expenditure, I'll be looking at the support mechanisms that are around. Being a landlord comes with a whole sort of wealth of scenarios in terms of how you may have structured your portfolio and how it may differ for everybody. I'd be more than happy to give more specific advice on a case-by-case basis. But I would certainly be, as a generalisation, I'd be looking at the mortgage holidays with your lender. Obviously, the term mortgage holiday in itself is potentially misleading, because that is effectively just a deferred loan payment, which will be added to your loan amount in most cases. Many buy-to-let lenders now are offering that support. So in the first instance, what I would do is I'd reach out to my lender and I'd start the conversation to see if there was some support there that I could make the most of, if my tenant was was showing signs of being in some form of difficulty. This is an interesting time for things like rent schemes, rent guarantee schemes, and rental income protection. And if you've got that, again, I'd be in dialogue with your provider to ensure that the policies would be valid in certain scenarios. So they would be the main sort of areas really that I would look to in terms of ensuring that you can still maximise the income while minimising the risk.
You touched on the rent guarantee. Interesting. They're quite new, I think, to the market. I don't know what proportion of our clients tend to take those up for fear of an apocalyptic scenario like this, which, as you say, has been so unprecedented. But would you be advising clients to take out those policies on new tenancies to mitigate their risk at times like these? And are they even able to take them out anymore now that something like this has happened?
It's an interesting question, Ori, to be honest with you. Of course, in a time like this, it's going to be trickier now to get good value on an insurance or a warranty sort of style product. What I'm seeing so far from most of the industry sort of leaders in this space is that the fully fledged sort of iron cast guarantee products are not being offered. They've removed a lot of those from the market. However, you can still get the warranty sort of insurance-based products where they'll pay you in arrears and they'll pay you pro rata, certain amounts, usually up to about 6 months. I've seen some providers actually come down from where they were offering up to 12 months rental cover. Now you can only get policies up to 6 months. So there's certainly been some modifications. And I think that the industry-wide and, worldwide, the last week or two has been a period of adjustment and adaptation. And it seems like the insurance providers are certainly not exempt from that. And so I think that you'll find if you go out to the marketplace today and look for certain products that, they'll be different from the products that you could have got even as recent as a few weeks ago. So important to check in with the providers individually and see what you can get. But I would certainly recommend still getting the warranty insurance type products. They tend to be the best value for money in a way. I don't want to numbers now again, without it's the best value for you can kind of secure up to 6 months cover. That usually comes with legal expenses cover and things like that as well. So to really consider it on new tenancies. For sure.
Great. Obviously, everyone in the world now wants a crystal ball to be able to see how this is going to pan out over the next few months, how quickly we're likely to get through it. And the government keep relaying information to say that, look, this is not like 2008 where there was a financial crisis. Things weren't artificially overvalued. There is some real value in our economy, and unemployment is still very low, or certainly was before all of this. We live in a prosperous time, so they're hopeful that it will recover quite quickly. But where do you see the property market going with as much information as we have at the moment, obviously, over the next few weeks and months? And how is 2020 likely to play out as a result?
And a great question. It's one I'm getting asked probably the most, actually, is where do I feel the market would go this year and how it will plan out. I'll quickly address lettings, as I think we've said that I feel it's secure. It's always been very secure market lettings. Inflation proof, recession proof. And at the end of the day, there is always a necessity for people, and we still ultimately do have a housing shortage in the UK. And that isn't going to change anytime soon. There are a lot of other variables in terms of, the pound, the sterling is weak still compared to other currency, and there is still investors that are going to want to take a punt on bricks and mortar in the London market, the UK market, but particularly London. Interest rates, of course, at the moment are just 0.1%, the lowest since records began. And there are going to be people that are going to see this as an opportunity. So, lettings for me is going to remain fairly untouched. It might move by a few percent, but I really can't see it being more than that. There are certain companies within the letting space that have been affected, certain kind of, what we refer to as sort of middlemen, people who maybe do the rent-to-rent model, for instance, which is quite popular among some of our clients, some of our landlords. They're the sort of markets that may need to look. Their margins may be squeezed a little bit, but in a broader scale, I think lettings is a very good place. And from a sales perspective, it's hard to say. At the end of the day, we still, similarly, it's a London property market is a secure marketplace to be, and we're in a position where if this goes on for weeks, I don't see any change at all. If it goes on for months and months and months, then again, depending on what sort of, if there's further support measures that are put in place by the government, that may well have an impact on things. But certainly in terms of what we are, if we look at trends in other countries that are slightly ahead of the curve with this coronavirus, you can see that places like, Hong Kong, for instance, I know are doing particularly well. A lot of my customers are over there at the moment, where a lot of the restrictions have lifted, and my clients are referring to it as one of the safest places in the world to be right now. So there are certainly brighter times ahead. I suppose the key to it is just how quickly they come. And I echo what I said earlier. I feel like our government have handled it very well, providing we follow the advice and do what's required. I do honestly believe this is going to last weeks as opposed to months. So, given that, my overall confidence in the market is still strong. Given the asset class that we all work in the UK property market, and the fact that I feel that we are ahead of the curve in terms of timeframes. Yes, the next couple of weeks might get a bit hairy while we see through we come out of the incubation period. But I really do believe that after that, we should be in good shape. And I feel like we've done enough collectively as an economy and as a country to pull through this in a position of strength. And I really don't see values being hard hit. I'd echo the comment that this isn't 2008, and I don't think it feels like 2008. I don't think there's anybody that I'm speaking to, anywhere, industry pundits, colleagues, friends, you name it. I've not found anybody that has that sort of concern. So I feel like it's certainly a once in a lifetime period that we're in. But it certainly doesn't feel too scary for me. I feel like there's a lot of confidence that can be had from various measures that have been taken. And yeah, I'd implore any of our customers to stay strong throughout the process, to have confidence in where in what we've done as an economy, as a country. And yeah, we'll get through this.
Fantastic. Okay, well, obviously this is a very fast-changing circumstance. It continues to be, and so we plan on doing some sessions like these, a few times a week, keeping as up to date on the situation as possible, and relaying whatever information we have and what we're seeing in the market to our clients. I know that a lot of our clients have posed questions to us already, and we plan on having sort of a more detailed session tomorrow just on your questions only, and the perhaps more detailed, intricate parts of what you're seeing in the market at the moment, and how we might be able to help those or mitigate your risk. So if you've got any questions for that, we'd love to hear from you. If you comment below or respond to this email, depending on which channel you're viewing this on. And in the meantime, we'll keep our fingers on it, I suppose, and see how this develops over the next few weeks and months. But certainly an optimistic outlook from where we're sitting, and we'll see how things play out.
Absolutely, and I'll be delighted to speak to anybody as well directly. And as I said at the start, health is more important. That's got to be everybody's priority at the moment. But from a business perspective, I do absolutely everything I can to keep you informed and share all the information that I do have with you. Again, there's a plethora of circumstances out there, so I'd be naive to try and solve everybody's concerns as general as this. But look forward to answering any of your questions with Laurie tomorrow, and we'll keep in touch throughout. Feel free to sort of follow me on any social media channels, and I'm dealing with a lot of people with WhatsApp at the moment. It's an easy tool to share information quickly, so if you'd like to be communicating with me on that as well, feel free to. I'd love to speak to you guys on a more personal note.
Fantastic. Thanks for giving us an overview today as well, Andy.
You're welcome. Thanks, Laurie. Great stuff.